Yo, welcome back.
What's going on? It's Zach and Parker back again for the Weekend Review podcast.
Yep, so we've got a lot of stuff to cover in terms of what happened in the market last week.
Yep, so we've got July 20th through July 24th for the week, and let's kick it off by just talking about the current state of big tech overall. Like what happened last week, what happened, where it's at right now.
Yeah, I think that's something very important to discuss. And so, yeah, especially when we're looking at how the market closed Friday, discussing the state of big tech is, really important and imperative to understand how the market ended. So the NASDAQ closed down nearly 1%, closing down 0.94% on Friday, and it was down 98.24 points. And, that essentially brought the rest of the market down with it. Not as bad, but the S&P was down 0.62% and the Dow was down 0.68%. So we saw how tech shares, slid on Friday, and that ultimately brought the rest of the market down with it.
Yeah, and I think Friday it was definitely a result of what we saw happening with Apple. Apple's falling apart a little bit right now.
Right.
They've been on a tear. A lot of people just came out with a lot of bearish stances on them. For example, Goldman Sachs thinks they're way overpriced. One of their analysts just came out and hit a $2.99 price target on Apple.
Yeah, I mean, you got to take those analyst calls with a grain of salt, though. Goldman Sachs said a few months ago, Apple, is overvalued, and it was $250. Not saying it wasn't overvalued, but look at where Apple's at now.
Oh, exactly.
That's something important to look at.
Yeah, I think that a lot of those analyst calls definitely drive the market and drive specific
absolutely.
stocks more specifically. So, like, Apple would definitely tank or have a worse day because a credible person comes out and says something like that. But what do you think? What is your opinion right now, actually?
So I definitely think tech's overinflated, but it's been bringing the market up overall recently. I think another interesting occurrence within the NASDAQ and, tech shares in general this past week was we saw not only, Apple sliding a little bit, but we definitely saw Microsoft fall after earnings.
Yeah, I thought that was crazy. And if you looked at it, they had actually recorded their best and most profitable fiscal year of all time.
Yeah.
In their company's history.
It's incredible how, these earnings calls, sometimes it looks like it's the best thing ever, and then, it doesn't wow investors enough, and there's a little bit of a sell-off and a small correction.
Yeah, and it's crazy to me because you see them make a ton of money. You see them beat on earnings per share. You see them beat in almost every metric. And then everybody decides to focus on the fact that Azure, their cloud computing side software, they've been growing at it's been growing at over 50% each quarter.
Right.
And now they hit even just below 50 at about 47%, just above 47%, and everybody takes that as a negative sign that their growth's slowing.
Yeah.
Things are going in the negative
direction. They raised
direction.
the bar too high for themselves.
And I think that's another issue we have with earnings and why it's going to be so difficult to play earnings too, especially in this season.
Yeah, the market, it's going to have to settle at one point, and it's been a little overextended. And that brings us to a good point of what you were saying with the overextension of tech. If Microsoft beat earnings so well and they had such a great quarter and still dropped, that might highlight the weakness that tech stocks overall have. And we saw Snapchat. I believe they had negative 0.09, so they lost 9 cents a share, which is what the EPS estimate was. Mm-hmm. And even though they met earnings, they had a huge drop on the day.
Yeah, I thought that was super interesting as well. We also saw Apple postpone their 5G iPhone launch. Right. So it was supposed to originally be in early September. They actually postponed it to mid. They said they didn't say a date specifically, but they said mid to late October.
Right.
And so I think we had people reacting to that as well, thinking that might take some profit off the table.
Right. And it also may be some, jitters in the economy as well, as people realize that tech isn't necessarily immune to, recession.
Definitely.
And, bringing up recession, we saw gold hit a 10-year high, right? They broke 1900 for the first time since the Great Recession.
Yep. Been over 12 years since they broke 1900.
Yeah, it's insane. And, gold, it was tearing up and, it was reaching 1800. But then when it went from 1800 to 1900, it did that in such a short amount of time. And that was really interesting, as even as equities rise right now, we're seeing gold rise because of uncertainty. Usually it's an inverse. But right now, gold's just rising because uncertainty is at a height and we don't know what's going to happen. The economy could improve and stocks could keep flying, or, stocks could go down. But I feel like a lot of people are flocking towards gold and silver, and now especially as their uncertainty rises, and that gives them, a tangible asset.
Yeah, and I think we'll see definitely those two precious metals specifically keep running up as until we at least have some sort of positive results on a phase in a coronavirus vaccine, something
Right.
more, something solid. Like we had nothing solid. Like the market
Right.
fluctuates off every single like
Yeah. Right now, it's all
little
off
news.
hopes and sentiments.
Yeah, every little news article and everything. So I think that gold and silver definitely are going to keep running up.
Right.
Like
I
we
agree. I agree.
keep an eye on like Barrick Gold and then like Pan American Silver.
Hmm.
Those two companies are definitely going to do well.
Yeah. They've been on an absolute tear in the past 3 months, 4 months.
Yeah, and speaking about people flocking to specific things like precious metals, what do you think about people starting to possibly flock to like cyclical stocks? Maybe.
Cyclical stocks.
Yeah.
I see where there's room for money to be made if you run them right, but at this point in time, personally, I don't like cyclical stocks because I'm honestly a big investor in precious metals, and I'd rather run Barrick Gold, Pan American Silver, even physical silver at that. Rather than run cyclical stocks right now, because I'm not confident in the consumer spending and how the consumer's going out, and I feel like until we address the fundamental aspects of how the coronavirus has, destroyed our economy, and until we get back to that sort of, level of spending
Mhm.
at pre-coronavirus levels, we're not really going to see a restoration of cyclical stocks. And right now, if anything is trading at a level near where it was before coronavirus, it's simply due to the fact that it's not only overextended, but that the Federal Reserve has pumped a ton of money into the economy, and that it's not really sustainable in my opinion because people aren't going out the way they used to, and there's money out there because the Fed is pumping it, but the economy is not in the state that it was, and I believe we saw that with the job report, that brought the market down a little bit on Thursday.
Yeah, definitely. And I think when we look at cyclical stocks, I definitely think that it would be super helpful if people did start to run to them to prop the market up a little bit more on something substantial, just besides the amount of money that the Fed's pumped in.
Right.
But I think it could definitely even out that imbalance between tech and everything else right now.
Right.
And so I also, yeah, I wanted to talk about just tech in general too. To contrast the cyclical stocks, I think that when you talk about the market being overextended, and I think it definitely is, basically almost everything on the market right now, except for maybe financials, are still pretty even. Right. They're still sitting at their lows.
Right.
But I think that we have tech. I don't know. I don't think they're too highly overvalued or as overvalued as a lot of people make it seem.
Right.
Like I think they are probably a little overextended, but I think that we're going to need it, and they're definitely going to flourish. Like we see Amazon, Microsoft, and Apple are definitely going to benefit huge from everything that's happening right now.
I Personally, I see this tech as extremely overextended, in terms of PE ratios and everything. But I see what you're saying, that tech is, making huge strides and they're making huge gains because people are at home and they need, their Amazon packages delivered. They need their Microsoft computer. They need their Apple iPhone. All that stuff is still very fundamental to our economy, especially in the work from home economy. And I believe that although certain tech stocks are super overinflated, like Tesla, for example, and I just think that there's going to be a fundamental correction in the market in the not too distant
And
future.
actually, speaking about that, I did want to talk about Tesla a little bit too in general and like the auto industry and the current state of that.
Right.
So I think that if we look at Tesla, at least to me, I don't have a problem with Tesla being the highest valued car company in the world,
Right.
but I don't think that they're that much more valuable than, let's say, Toyota, for example,
Right.
because Toyota has such a far reach and produces so many more vehicles than Tesla does and has such a wider and broader consumer base. I don't think that Tesla can sustain those levels and compete with Toyota for that amount of time. Maybe I can understand the idea of investing in them for the future in terms of
Right.
EVs, like electric vehicles, and where that market's going. I understand the potential there, but I see it 20 plus years out, honestly. Like I still see the main auto players still playing the main role and making the most money in that area. So I don't know. And they did, I mean, credit to Tesla. They posted a huge quarter. They were profitable. They beat earnings by a lot. I think they did awesome.
Right. Yeah.
I don't know if it's sustainable.
I agree with what you're saying. And looking at that, I think that's where you fundamentally look at, speculation in terms of, like you said, electric vehicles versus, fundamentals. Toyota is fundamentally a way more sustainable company. But that's when, you come into the market and you look at, disruptors. And Tesla's definitely a disruptor within the industry.
100%.
And so, they may not sell as many vehicles as General Motors, Ford, Toyota, but just because the way they fundamentally change the marketplace and how they bring in something so new and so unique that's completely different from all its competitors, and that's doing it on such a greater level, it gives them an advantage, at that price point. And that's why there's so much hype around it. And I don't think that hype is necessarily what Tesla's worth today. I think it's if Tesla takes over the marketplace, obviously it'll go up, but that's sort of contingent, in my opinion, in looking at how Tesla is going to move in the future and how electric vehicles will take over the marketplace. And the bull versus bear case for Tesla is very interesting. There's analysts that look at Tesla and say that it's super valuable. It's undervalued right now, according to some analysts, because they see the future electric vehicles have and where it could go in the future. But there's also analysts that are saying Tesla's future is unsustainable. It's uncertain. We don't know where they're at in terms of profitability. And I saw an interesting article the other day that was talking about Tesla's profitability and saying that they're only profitable because of the fact that they're through cap and trade, they're selling their carbon tax credits.
Yeah, that's a super interesting point as well. Well, we just saw their last earnings are not eligible to be added to the S&P 500.
Right.
So it's going to be interesting to see whether or not they get added, and Standard & Poor's does decide to add them to that list, because that would mean that the shareholders and the people on the board of Standard & Poor's are required to buy shares of Tesla and invest in Tesla. So it's going to give a lot of a broader base, and there's going to be a lot more shareholders. It's going to be a lot more widely held by individuals.
Right. Yeah. Especially if it's added into the S&P, a lot of those S&P index funds will then be Tesla shareholders. Exactly. But I believe the volatility right now is too much for it to be in an index like that.
Yeah, I don't think it'll get added yet, but it definitely opened the door for the future.
Right.
So, it's no knock on Tesla. I do think Tesla's a great company. Their business model is great. They're super efficient, and I think that they're going places. But we'll see how things play out in the future. So this leads to the next point. So AstraZeneca, they announced on Monday.
Right. AstraZeneca announced positive results, for their vaccine that they're testing for the coronavirus. And the Friday before they announced, they had hit a 52-week high after hours. They were on an absolute tear. They were up over $63, I believe. And, they were in a good position. And, with positive data, you would have expected, a good rise in the stock price. And Monday had a huge opening. It was hyped, but there was a drop off. And I don't think that it received, if you look at companies like Moderna and Novavax, they had huge one-day jumps. And I don't think that was necessarily based off positive data for their vaccine, but rather, the U.S. government saying that they would buy a certain number of dosages. And I don't think the U.S. government has said that for AstraZeneca, so that may be a reason that they're not, overhyped like the other companies are. Yeah. Even though they're posting this positive data.
Yeah, and I think it's crazy to see this investors just flock every direction every single time you have somebody post some sort of positive result, or phase one. You have a company say phase one was successful. We had X amount of people that were tested showed this many antibodies, and then everybody flocks to the stock and it jumps up with no understanding of maybe how it's working, how the next phase is going to go. I think it's crazy to see that. So let's look at now. Obviously, Intel crashed.
Oh Friday. Yeah, absolutely.
Horrible.
Intel's just Intel's had a rough week, and the stock price has reflected that. They went as far as to announce that they may not even manufacture their own chips. They might outsource it to China. And, that was an absolute defeat for the company, the largest, chip manufacturer in the whole world. And, that gave a lot of room for AMD to run up the next day. Advanced Micro Devices absolutely jumped based off that news because they're, the next biggest competitor. And, Intel is losing ground at this point, I believe.
Yeah, and we just saw, actually, NVIDIA was just right neck and neck with them prior to this drop they just had. But then with their drop, NVIDIA just took a huge advantage over them. And I think NVIDIA is taking a prime spot right now, along with AMD, as you said. Right. So we'll see. And also, I think there's some room for Micron, too. I think the semiconductor industry is hot right now.
Right. I agree. And I believe Intel is just losing their spot. Fundamentally, they're a good company. They're a big company. But, sometimes you have to adapt and grow. And, I don't think that they're doing that adequately.
Yeah, and I think there was so many people waiting for that 9-nanometer chip to get produced and get sold to use in so many different forms and facets. And I think that's a shame that they're going to lose so much profit over the next year not producing that and not manufacturing that. And the fact that they said throughout everything that's happening, they're already even just having general manufacturing problems with their regular chips, not even new things that they're producing.
It's horrible.
So we'll see. I think open some room for AMD. So I think we expect them to run up big, continue to run up probably over the next few weeks, honestly.
Right. And I think something, that another indicator of how the economy is doing that we want to look at is, the jobless claims. The data
Yeah, definitely.
came out on Thursday. The
Yep.
Department of Labor posted that in the morning. And recently, we've been beating estimates. We've been beating them reasonably, and the market's been doing well on those days that the Department of Labor releases the data because the data has been better than expected, even though it's not good. Americans are still filing for unemployment and receiving those claims. But the consensus estimate for this past week was 1.319 million, yet we posted 1.416 million. So that goes into showing how the economy is not recovering as fast as, analysts expect it to.
I think that the market will continue to reflect just the general news and general state of the market, how many people have jobs, how many don't, all that stuff. We're so based on news right now, I feel like there's no grounding besides everything being pumped in by the Fed right now to the financial markets. There's really no stabilization. There's nothing
Right.
holding it up, even just like even specific stocks. Like we have Amazon, like who's just flying up, flying down, super volatile, throwing the NASDAQ around in the wind. Like see companies like that. So that have a huge stake in these major indexes. Like even those big businesses are super volatile right now. People don't know how to feel, whether they're going to post great earnings, whether they're going to miss, whether they're sustainable, whether they're not. So that would lead me to the next point of just like state of the entire financial market and the major indexes as a whole. And I know we talked about where they finished,
Right.
and I think we're in a weird place right now, and I think that we definitely still have the opportunity, depending on what sectors and whether cyclical or tech, what people decide on investing in and what people like. I just think we still have a chance to stay sustainable and stay in the place that we're at, but it's going to be iffy, and the market could fall off the cliff at any second. I think we feel that like almost every week the market takes a downturn, and we go out and we say, oh, is this the end? Is this the end? And
Right.
then it
Yeah.
just takes another upturn back to where it was
I
before.
feel like that's where the jitters, come from. What we were saying as gold prices continue to rise and they're on an uptrend due to the uncertainty within the market. And, the VIX is fairly high, and which makes it hard for, average investors to sort of grasp where the market's going because nobody knows where the market's going right now. We're not on an uptrend, we're not on a downtrend. It's up and down, up and down, up and down. So, people that are investing on a day to day basis and that don't really have a fundamental grasp of companies, of sectors, and of how these different indices move, they can get burned really easily because they don't understand how volatile the market can be and how damaging it can be to their portfolios, especially when they're looking at, buying into positions, that are flying high, and the next day the market dumps. And then the
Exactly.
next day they think, oh, it's going to go down, they enter short, but it flies. It's impossible to read right now accurately.
Well, we see people like that happen in tech. Like we see people, individuals buying shares of Apple still, buying shares of Amazon still at record rates. But then you have big money in these big foundations and big investment firms
Right.
just pulling all the weight carrying those companies. We see them pulling it out or adding it back in at just weird, unexpected times. So
Right.
we'll see which way the market goes from here.